Hi there, in this video, we will cover financial reporting and analysis LOS 22D to LOS 22F, LOS 22D. Describe the objectives of audits of financial statements, the types of audit reports, and the importance of effective internal controls. Let's talk about objectives of audit. The objective of an audit is to create an opinion about fairness and reliability of financial documents. Audit is done to check for reliability, material errors, accuracy of figures. Result of audit is auditor's report or opinion. Auditor's opinion has three parts: independent review, assurance that there is no material errors, reasonable estimates and assumptions. Types of audit reports. According to the opinion, auditor's reports are three types. Number 1, qualified opinion. A qualified opinion suggests the information provided was limited in scope or the company being audited has not maintained accounting principles. Number 2, unqualified opinion. It suggests that a company's financial records and statements are fairly and appropriately presented and in accordance with accounting principles. Adverse opinion. Indicating that a company's financial statements are misrepresented, misstated, and do not accurately reflect its financial performance and health. Internal control. System to ensure the preparation of fair and accurate reports. Sarbanes-Oxley. The Sarbanes-Oxley Act of 2002 is an act passed by U.S. Congress in 2002 to protect investors from the possibility of fraudulent accounting activities by corporations. LOS 22E. Identify and describe information sources that analysts use in financial statement analysis, besides annual financial statements and supplementary information. Information sources. Sources of information other than annual reports are: Number 1, interim financial statements. These are the statements which companies are required to submit quarterly. Number 2, required disclosures. These are key SEC filings like Form S-1 registration statement. It is filed prior to the issue of new security. It contains details about issuer, the underwriter, the risk associated with security, and disclosure about the usage of funds. 10-K annual filing. It contains annual statement about business and audited financial statements. 10-Q quarterly filing. It contains any material changes in business and unaudited updates to the financial statements. DEF 14A proxy statement. It is a statement to SEC. It contains the matters about shareholders' votes. 8-K major material event. This filing contains major changes in assets or corporate governance. It is filed whenever the changes occur, so it's very important for an analyst. 144 issuance of qualified buyers. In some cases, a company may issue a security to a group of qualified buyers. Company may not have to register security with SEC, but they are still required to notify SEC with Form 144. Besides previously mentioned filings, there are other very important sources of information for analysts. They are press releases, conference calls, earning guidance, industry reports. LOS 22F describe the steps in financial statement analysis framework. An analyst can be working in following dimensions: equity investment, acquisition, creditworthiness. There are 6 steps in financial analyst framework: articulate, collect, process, analyze, develop. Follow-up. Number 1, articulate. It is to articulate the purpose, motivation, and context of analysis. 2, collect data. It is to collect data from financial reports, management's commentary, or conference calls, personal visits to the site, other information sources. 3, process the data. It may contain ratio analysis, common size statements, forecasting models. 4, analyze or interpret data. In this step, an analyst makes assessment. 5, develop and communicate conclusions. In this section, analysts answer initial questions, provide recommendations. 6. Follow-up. In this step, analysts gather new information and add to the report, and also update conclusions. Thank you very much for watching. For more, please subscribe.